Namaste. I am Arjun Khanna, Portfolio Manager of Kotak Global Innovation Fund of Fund. We want to thank you for your support during this difficult period, and through this video, we intend to address some of the queries that we have received about the fund and its performance.
Namaste, Kotak. Michael Mazdea here, Co-Portfolio Manager of the Wellington Global Innovation Fund. Innovation is a passion of ours. Brian, my co-portfolio manager, and I have been researching and investing in innovation for nearly 4 decades combined. We want to take this opportunity to thank you for your continued trust in managing your capital.
The time of launch did not favor Kotak Global Innovation Fund of Funds. Our fund was launched at the end of July in 2021. This was after a period of robust performance for global equities and growth-oriented equities, in particular in the years 2020 and 2021. The succeeding period has been an extremely challenging environment for global equity markets. From November 2021, global equity markets witnessed a steep decline until October 2022.
During the period, there were 3 main drivers of performance. Firstly, in 2021 and 2022, inflation and interest rate expectations drove stock prices more than long-term profit growth. Profit growth is key for long-term share price performance. We faced headwinds due to the underperformance of growth stocks in that environment. The second driver was our underweight to energy. We remained naked to energy, which was the best performing sector in both 2021 and 2022. And third, the third driver was tough stock selection in North America, particularly in owning media and software. Not owning certain mega-cap tech names helped, but our media and software holdings struggled. We used the sell-offs as opportunities to add modestly to existing positions. However, what's important to appreciate is that while the macroeconomic conditions have been a headwind, this historically has been a short-term factor, and ultimately the underlying fundamentals of a company's profitability and growth is what drives share price appreciation over the medium and long term. Over the course of 2022, we carefully re-examined the validity and strength of our individual investment theses to ensure that we held a robust portfolio of companies that could generate meaningful investment returns over the medium and long term. We haven't changed our investment approach and believe it can still work well. But we learned some lessons from 2022 and are using them to do even better in the future. We need to be careful in risky industries, especially during tough times, and use risk models and position sizing to help us. We also need to diversify our risks and be smart about how much we invest. We reflected these lessons learned in our positions in areas like healthcare and software. One of our top relative contributors in 2022 was Daiichi Sankyo, a leader in oncology and antibody drug conjugates. It was also a new purchase early in the year. We believe the market underappreciated the company's shift from generic drugs to innovative prescriptive drugs, vaccines, and OTC drugs. Amazon was one of the biggest detractors in 2022. Although there are short-term challenges and market sentiment around the company was quite negative, we focused on its long-term growth and profitability and continue to own that name. The company is growing revenues at double digits and has potential for continued growth in the future.
We are pleased to report that the NAV for Kotak Global Innovation Fund of Funds climbed up to 7.48 as on 31st March 2023. That is 13% returns in the last 3 months versus 7% delivered by the benchmark, which is the MSCI All Country World Index TRI, that is an alpha of 6%. Over the last 6 years, since the inception of the strategy, the underlying fund, which is the Wellington Global Innovation Fund, has delivered a CAGR, an annual return of 16% in rupee terms since inception, compared to the benchmark, which is the MSCI All Country World Index TRI of 12% as of March 31st, 2023.
While we remain cautious of risk assessment at times of market extremes, we see a long-term opportunity set. Today, the portfolio's expected growth rate is higher than it was prior to the pandemic, while valuations are substantially lower, providing potentially favorable risk-reward setup, potentially the most we've observed actually since the strategy's inception. We are finding companies with innovative growth and control of their own destiny with this innovation-driven durable growth. Our approach is similar to private equity, building a portfolio that capitalizes from market volatility. We see opportunities in megatrends like digital transformation, cloud migration, AI and machine learning, sustainability, direct-to-consumer models, and healthcare innovation, just to mention a few. It is a privilege to be stewards of your capital, and we take the responsibility to manage your wealth with the utmost seriousness. This is our dream project, and we've never been more excited about the pace of innovation we're seeing out there. As bottom-up stock pickers with extensive experience in innovation-rich sectors, we are confident in managing risks through both fundamental and valuation decisions. Lastly, I would like to share our gratitude for your continued patience and confidence in our ability to potentially deliver compelling long-term returns. Dhanyawad.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.